Well, we're going to turn it over to Brother Jay. He's going to get us started over. I've got a couple little notes from Dutch. He is doing something, I guess we'll call it for the Academy, and then we'll get Z on. So, Jay, you got anything for us, my friend?
No, I don't have a whole lot. Welcome, everybody. Thanks for coming. All the new guys, happy to have you here. It is Derby week. Trader Z will be going to Churchill Downs this weekend. So if you have any picks, if you have any insider horse knowledge, please put it in the chat. And then put your questions in the Q&A. Be sure to do that because we're going to get to them at the end. But that's it. No, man, I'm gonna hand it over to Z. Let's get it going.
Welcome, everybody. Thank you for being here.
Real quick, Z.
Yeah. Come
wanted to make sure that I teed you up right, and because with Z's trade picks and Dutch and Donk, we ended April 35% up for the month. That was with some crazy, wacky stuff happening to all of us in April. 35% up. Some of those huge trades were GCT, CRS, TECL, GDS, TMDX, AVAV. There might be a couple more, but we're now up 230% for the year. And we have a pretty good jump on May, posting around a 2% gain. And that's after crazy Powell talk. All the people that messaged us when that market was ripping, going, look, you guys don't know what you're doing. Maybe you didn't stick around for the final act once the man stopped speaking. So congrats to carnivores that followed the trades. That we are 90% cash right now. Z's got some information. I'll let you take it away, brother.
No worries. All right. Thanks, man. Guys, thanks for being here. This is a monthly call. So we do a little bit of reflecting on the previous month. Let's get through our disclaimer quickly. We're not a registered investment advisor. Past performance is no guarantee of future results. Carnivore trading portfolios are hypothetical. Nothing on this call should be construed as personalized investment advice. And always remember to do your own damn research. So it was Fed day today, of course. And I saw this this is kind of like the mindset of the market right here. Jerome Powell telling the markets that rates are going to be higher for longer, and the market just kind of saying, yeah, we're going to get some rate cuts by the end of the year. Look, they're still pricing them in. Right now, we've got 2 rate cuts over the next 12 months, but the first cut right now is priced in for November, just in time for an election. The other observation I would make to everyone that maybe a little burnout or a little tired or, been kind of grinding through these markets, realize that you are living through truly unprecedented monetary extremes. And we've had rates rise faster than any other time in modern history. And you can see the pace compared to those other rate hiking cycles here in this chart. But this is everything. And I've got a quote later on that I'm going to give you from Stan Druckenmiller about why this is everything. But just keep that in mind as you look at the stock market. Keep this into context that, this is what you're going through. This is what you're trying to invest through. Makes it difficult. I saw this, I'm sure occasionally I say some stuff that in retrospect on these calls is wrong and sounded stupid. I just thought I would mention that occasionally really, really great, sophisticated investors do that. Here's one from Warren Buffett saying he doubted it was very likely that corporate profits as a percentage of GDP could ever, for a sustained period, hold much above 6%. We've been doing that for quite a long time now. So just know that we do our best here, but we're wrong like everyone else, including Uncle Warren. So we got to set the stage. We had this run, 25% in 5 months. It's only happened 10 times since the 1930s. It was a really smooth ride, guys. We had what was the 10th longest streak above the 50-day moving average, going all the way back to 1950. So, it was just a great run from November of last year into the first quarter of this year. But we got to April, we showed you the seasonality, and we got the turn. It was ugly, but so far, guys, I give you this. I showed you this last call. Pretty typical stuff. Okay. Nothing out of the ordinary. These are all the corrections going back to the March 2009 low. And in terms of where we were at in this one, it's pretty regular, quite frankly. In April, the leading market, major market was silver up 6, gold was up 3, the dollar was up 2%. Everything else was down. You can see small caps got nuked, REITs hammered, Bitcoin was down 17%, NASDAQ down 4, S&P down 4. It was an ugly month for the major averages. But the real story remains what's going on in bonds, guys, and I'll speak to that in detail later. Put this into context, though, guys. What goes up must come down. Bitcoin's still up 43% on the year. Not really surprising. It was the big wounded animal from the month. It's up the most. Gold's up 11%, silver trailing, and you still got the markets up 6 and 4, and the S&P and the NASDAQ. We don't talk too much about the Dow, but it's lagging a little bit. REITs on the year down 9%, aggregate bonds down 3%, volatility down again. You can see this on our asset class total return chart, courtesy of Charlie over at Creative Planning. He does some great stuff on FitTwit. If you can see over here on the far column in 2024, you'll see pretty much anything income oriented is in the red again. So if you're a fixed income investor or bond investor, man, the hits just keep coming. If you think you've had a rough ride in stocks, guys, the bond market is a disaster. So here we are. Let's get to what everybody wants to know. Worst case, you get down to 470 or so around the beginning of June. This is probably the camp. Dutch may be in this camp. I won't speak for him, but this gets you down to the 200-day, guys. This is VN just looking at the 200-day, looking at the RSI, what it would take to get us oversold, extremely oversold. That's the worst case scenario. My base case this entire time has been maybe 485 by mid next month. That'll get you oversold. That's going to get you down, quite frankly, to some fib levels that I highlighted on the last call, mainly this 4820, 485 right here in that 38.2% retracement level. That's the sort of the probably most likely target, guys. Best case scenario is that we've already bottomed and we just need to bounce around here for another month. It's possible. I would probably say this is more likely than us going all the way back down to the 200-day, but optimism springs eternal. Vector Nostradamus thinks it's very unlikely the Qs are going to break their 200-day moving average. We didn't back in October, November. Highly unlikely. I think that we do now. I would say, I was just talking to you about this, pal. The only way that we've already bottomed and then we got to jostle around and we're going to hold that mark in the S&P that I drew here, 493 was the low, is if SMCI and NVIDIA hold their lows. So if you want us to have already bottomed, then you're going to need to see leadership and AI. You're going to need to see it have already bottomed, and you're going to need to see it sort of bounce around up here at these levels. Made a higher low today in SMCI. I'll be interested to see if we can hold that tomorrow.
Your RSI and the SPY is real low. See?
Yeah, we've come down a lot. Weekly still a little bit elevated. These are daily charts. The weekly, I like the MACD here on NVIDIA. I also got to tell you the read-through from Meta on NVIDIA's earnings. They're gonna blow it out. I don't know how the market's gonna respond. They're gonna blow it out. That's all that money Meta was spending in CapEx was going to NVIDIA. So hey, here's our other kind of inflection point, guys. And I tweeted this today. This 195 resistance level that it took us a trillion times, not a trillion, 5, 6 times to get through on the weekly and the Russell. We're there. So bulls better hold this or we leg down to the 200-day. Probably do. Okay. But maybe we don't. Maybe we hold. So the signs for, you to look forward to, if you're a bull and you're hoping that we've already bottomed at 493 and we're going to jostle around for another month, is you need the Russell to hold 195 and you need SMCI and NVIDIA to hold. Okay. I don't know if that's the case. In fact, I'm not betting on it. Neither is Dutch. That's why we're in so much cash. But why do I keep talking about the Russell and rates? And, and I told you this last time. Small companies spend more of their income on debt service, making them more sensitive to interest rates. Here's the rate differentials paid by S&P 1500 firms. Okay, you got the smallest versus the middle and the largest. You can see that the large caps are insulated from this interest rate environment that we're in. So here's the Russell, zooming in a little bit. I think the Russell probably holds its 200-day. That's here again, guys. That's why I'm in that 45. I'm in the moderate camp because I don't think you lose the 200-day in the Russell either. We're not that far. That'd be your last leg down. Maybe you catch a new low. Worst case scenario, you might get down to 178 in the Russell. That'd be bad. That'd be worst case scenario. What would cause that is the bond market. So here we are in TLT. We've shown you this chart 1,000 times. The problem now is we're about to have the cross, the moving average crossover. Here it was back in July. That was negative. We got the move up here, but we never built off of it. So we're at that inflection point. MACD's turning up. Got a few reversal indicators. Look, this is the most important chart in the world right now. That and the 10-year, of course. Here's your 10-year yield. The high was 5 back in October. That was when the market was selling off. Here's what caused a subsequent rally in the stocks. That was the boom time. Rates up, stocks down, rates down, stocks up. Okay, so here we are. Market held up well during this environment, but we're testing that 5 threshold. I will say we've got some fib resistance here, and we've hit it and we've bounced back. Maybe we don't get back up to 5. That'll be why the market's already bottomed. So if you here again, you're looking for those indicators of market already bottomed, well, then get bonds to catch a bid, as I've said 1,000 times, and let rates start coming down.
Zeke, I got a question. Got a question. Do you put any faith into QT that they're slowing down to soften?
Absolutely, and quite frankly, Powell, that's why we rallied a little bit after the.
That's what I'm saying.
That's literally what I was looking at right here, Powell. I was going to ask the exact same question, but I had to make sure that I heard it right first.
It is, and you that's what you got today, which you got a little bid here in the bonds because remember yields down, bonds up.
That was the most significant thing I think he said, and if you
on June 1st,
if you look at the yearly chart on the TLT. I'm showing money flow is turning up.
Mm-hmm. Yeah, and interestingly enough, in our systems, I've gotten so jaded in this. We got a reversal signal here just a couple of days ago.
Yeah.
So the systems are seeing the same thing, and look, I would say if you could get a rollover here in the MACD, that maybe we come back down to 4.5 first, which would provide a floor for the market right here. And guys, I'm not just making this shit up about stocks and bonds. Okay, we're at the highest rolling 3-year correlation between the S&P 500 and the Bloomberg aggregate bond index, going all the way back to 1996. All right, in fact, we're higher. So this is all one big thing now, okay? And it's all driven by interest rates, which are all being driven by inflation expectations, and that's where we're at. So the macro has taken back over, and typically when you find yourself in some sort of stagnating environment or discussion of stagnating environment, whether it be about growth or inflation, people start realizing that the only companies that are really growing and making any money are Amazon, Google, Meta, Microsoft, and NVIDIA. Don't believe me? Well, here's AWS's revenue over the last 12 months, 94 billion, and it was higher than the revenue of 466 companies in the S&P 500. And that's one division of Amazon. That's not the whole company. Okay? These companies make all the profits. All of it. Okay? Microsoft's revenues increased 17% over last year, $61 billion, 1 quarter. Okay? Net income, $21 billion, second highest quarter ever. Operating profits, 45%.
Hell, they made $1 billion off the interest.
Hey, you're going to see that. Hey, Powell, that's what's crazy is the higher interest rates are actually helping all these tech companies who are sitting on 30, 40, 50, and I mean, look, I think Buffett's sitting on 160 billion. He's making billions now off this. So the advantage that these large corporations that are sitting on cash balances have over small companies now, it's unbelievable. Here's Google. New first quarter high, 80 billion. Net income increased 57% year over year to a record 23 billion. Okay, in a quarter. So we got a divvy out of Google. These are the market. This is where people go when things get out of trouble. And you've seen that that's probably been the best place to hide. Now, the place not to hide, here for any financial advisors out there, how perverse is it that you would have been better off keeping all your old retirees' money in Apple and Google and Amazon and NVIDIA and Meta than you would have been sitting in bonds? Because your long-term U.S. government bond returns, rolling 10-year annualized returns is 0. Okay? That's not after inflation. We're in the longest drawdown in bond market history, 45 months. Okay? I'm getting tired of talking about this shit. Pardon me. I mean, I'm not kidding you. I mean,
Bond's got to catch a bid.
Hey, that'll be, let it go down as like legend. Like, I'm going to say it till I'm blue in the face. Bond's got to catch a bid, guys.
Bond's got to catch, I can hear it.
And this is a historic drawdown. Like, it's historic on time. It's historic on percent. It's creating havoc for so many things in the economy. And we've got a yield curve that, quite frankly, has been inverted now for so long that the reality is I'm starting to think the only thing that's going to uninvert the curve is for the Fed to lower rates. Okay. And, this is where we're going to get into the whole, hey, Z, they're not, conquering inflation. Why are they going to cut rates? Okay, well, here's why they're going to cut rates. So if they don't, they're gonna send us into a recession, and they're gonna have to start worrying about stability over inflation. And you're seeing things crack. Like, hey, the fact that the cost to buy over the cost to rent is a record high. So this is the least affordable buying versus renting is in the history of America, at least the modern era. Okay, home prices and affordability. We're at the least affordable housing market ever. Monthly mortgage payments to buy a house in the U.S. have increased 92% in the last 4 years. That's a 100% increase to buy the same damn house. How are you going to tame inflation when the biggest problem in inflation is rent and a shelter component that you can't get down, when you're causing housing to basically cost more? You've killed the existing home market because nobody with a 3% mortgage is going to sell their house ever. Okay. You got a debacle in office vacancy rates that you can follow every day. Get on Twitter. I'll post every once in a while about some, $200 million building in a metropolitan area swapping hands for $3 million. It's happening. You got credit card delinquencies moving up. You got a commercial real estate ticking time bomb in terms of rolling over, $929 billion. You got the U.S. government that's got to roll over 38% of the federal debt in the next 3 years. You got the interest expense on public debt outstanding running at $1 trillion a year now, crowding out other parts of the budget. And in my mind, you got a Fed and Treasury with a sort of 30-year goal of thinking the only way to get a lower debt to GDP ratio is 3 to 5% inflation forever. That's it. You got to run it this hot forever basically got to run it this hot unless you get a civil revolt. That's the only way to get lower debt to GDP at this point, guys. That's it. Don't forget it. The other thing is we got stranger things because all they keep talking to us is about how great the job market is and how GDP is great. Well, the job market, the books are cooked, okay? 212 for like 5 weeks in a row. It's statistically impossible in an economy of 160 million workers. It just is. And most of this is gig stuff, and some of it's gig stuff for illegal immigrants. Let's just be real. So Dutch is going to miss it again, but there it is. I'm not putting it on here again. It's the second damn call, but we're dealing with a lot of shit here, people. Okay.
Well, you just made the case for Bitcoin.
Well, right, and I usually do it once a call, right? So
yeah, so let's get on it.
That's right. So here we're gonna get into, hey, we hit you with the doom and gloom when we get all macro. This is what we do. But we remind you why we're here. Okay, this is why we're here right here. We're trying to find the best performing stocks. SMCI is still up 200% of the year. NVIDIA, though, 74%. That's in the long-term portfolio. Here's Lilly, holding up really well. In fact, that's one of the few trade triangle names that are all three green. DaVita showed up on my screen today. That's a dialysis clinic. So
why didn't you put Root on there? Shit.
Not in the S&P 500. But it should be. It should be.
It should be, pal. It should be.
So, hey, here's the part where we talk about what we're watching. But this is where it gets a little different. Look, I got to read something to you for this. It's going to take a little bit of time. Everybody knows George Soros.
Asshole.
Well, a lot of people don't. Yeah, he is. He is. But a lot of people don't know his chief lieutenant, Stanley Druckenmiller, who was probably as big of a part of Soros' success as he was. He retired back in 2010, but he put up 30% a year over a 30-year career with like one down year or two, and it wasn't even that bad. I mean, probably the best non-quant track record in fund history. Okay,
he beat Julian Robertson.
He beat the shit out of him. Not even close.
Yeah,
not even close. Beat all the Tiger Cubs mostly. And quite frankly, was a big part of that bet when Soros made $1 billion betting against the pound. But here was his quote. He gave a speech in 2015. He said this was his secret to his success. So here what I'm telling you is the best damn fund manager of all time is literally telling you the secret to his success. And here it is. Earnings don't move the overall market. Focus on the central banks and focus on the movement of liquidity. Most people in the market are looking for earnings in conventional measure. It's liquidity that moves the markets.
That's why the QT softening today meant a lot.
It does. And hey, this is also why when we talk about what we're watching, well, this is what we're watching, guys. We're watching to see inflation come down just enough so that the central banks of the world can start cutting. Okay, here we are. Who's cutting? Look, we're starting to see little green pop up here and here. Now we need the majors to come.
When you first showed that table, there wasn't a green one on there.
There wasn't. That's right, Powell. So it's happening. It's happening. Look, most of the inflation trends across the world are going lower. Thank God you don't live in Argentina, Venezuela, and Turkey, right? That's the case for Bitcoin right there. But what we need is for Europe to go ahead and start cutting, which they're going to do. There are the ECB signaling. So you got that coming, and this is what we're watching. This is the thing that's going to create the turn, guys, and it'll create the turn in the bond market. Now, what really got the market spooked the other day was this. It was labor going up, and I'm watching wages like a hawk. So I've gotten back to where I'm watching this econ data. It's not exciting, it's boring because whatever, you can't trade it. But this is what's driving the market. The other thing you got to watch in this CPI situation, and I think this is gonna happen, and I hope it does. But CPI inflation is still elevated. Okay, shelter CPI is still elevated. It's a lagging indicator, and rents are coming down. There's U.S. rents. Okay. If you drive around major metropolitan areas, like Atlanta, there are apartments going up everywhere. I think we got the right trend happening in rents. I think CPI at the shelter is going to come down and continue to come down. I think that's going to get what you need. The real question, though, is wages going to screw this up? So that's why I'm going to key in on those. That's what we're watching. The other thing we're watching, Powell, is getting kooky out in foreign exchange land. The Japanese yen, the dollar's going parabolic against the yen. Okay, this is a monthly chart. This is a currency, people. This is not supposed to happen like this.
Right.
And it creates all kinds of destabilizing, effects in the global markets. The Japanese have come in and intervened. I think they spent $60 billion in one day. It did nothing. But this trend looks really extended. A reversal there, a central bank intervention, a talk by the Fed or the Treasury to actually talk the dollar down would go a long way into settling these markets down. Guys, remember, no one in the world wants higher rates. The Fed doesn't. Janet Yellen doesn't. The Japanese don't. The Chinese don't. The Southeast Asian governments don't. And none of them want a stronger dollar. None of them. In fact, the rumor is that Trump and Paulson, who he's floating as Treasury Secretary if he wins, are cooking up a dollar devaluation scheme a la Plaza Accord 1980s as a means of jumpstarting this economy. Okay, so the powers that be know that nobody wants higher rates and a strong dollar, but they got to get this inflation thing to get to a point where they can start cutting. So that's what I'm watching now. Hey, everybody wants to know about Bitcoin. All right,
I'm one of
them. Look, you've got the craziest asset in the world, okay? But computer shows a lot of support around 52. So if you're a believer, which obviously I am, then you buy the dips and you stack the sats, as the Satoshis is the saying. So you accumulate on weakness. Don't buy crypto on strength. It's a great way to lose a lot of money. All right. What are the systems? All right, hey, look, I still say you get a parabola blow off in Bitcoin long term, target 150 to 200, maybe sometime into this year, beginning of next. That's a long term call. Okay. What are the systems saying? Let's get to it. So we got pretty weak breadth, guys. The Russell's not playing ball, so this has been pretty ugly. It got really nasty for a while there. We stabilized on the 24th and we at least went yellow, but everything's down. Need to see breadth improve. Won't do that unless we get weaker rates. What am I seeing in Sectorville? We really hadn't seen much of anything interesting here in a while, but what I'm seeing now that I do like, at least it's getting on my radar, is that mining gold and silver has gone from 103 to 27 to 19. That's a hell of a move real quick. Mining and ore, 154 to 30 to 17. So we got some activity here in mining, coming hard off the block. Steel's in that mix too, 107, 29, 21. So we got some activity there in the metals. You see this up here, computer hardware is still kind of dominating, but not a lot of activity otherwise. Talk to me.
One of the things I noticed today off Market Club is I got a lot of signals that in the oil sector that had gone from a plus 100 back down to a plus 75. And a couple of them had gone to a plus 55. That might bode well for the next inflation CPI number, if that holds true.
You definitely need you need crude to roll over.
I heard today somebody was talking today that if oil went to $95 to $100, it was going to be a real problem. But based on the sell signals I got today off the Market Club in the oil patch, that to me was encouraging.
Yeah, look, you got some inventory build in crude. That's what has brought prices down a little bit. I would believe that at 95, you're going to see them dump the strategic oil on the market again. So, don't forget there is an election this year.
But for them,
here's your weekly sell signal on Exxon.
Yeah, for us to be seeing that and with the summer driving season coming up, I think it's a good sign.
Yeah,
Exxon, didn't Exxon have really good news today? And didn't they win a lawsuit? I thought something good happened with Exxon.
Chevron's a plus 55. See, it's it's gone red on one.
Yep, right here. You got daily sales signal. You've dropped in strength tremendously. The flip side of that, Powell, is the only problem is the only real strength you got is Lilly and Google and Procter and Gamble and NVO. Man, those weight loss drugs, guys. Just
NVO reported today, didn't it? See,
what's that?
Didn't NVO report today?
So Lilly reported a few days ago and obviously killed it.
Pfizer reported today. That's Crooks based.
I knew one of the big ones did. Yeah.
Yeah, and Lily's numbers were just fantastic. I think you've seen a little sympathy rally from VKTX off that, but that I see. So Powell, what I would say about the systems on trade triangle here, we did get a daily signal sell in the Qs. So the first thing I'd need to see would be for the dailies to flip on the major indexes, and then for a couple of other tech stocks to get in the game. Keep your eye on Tencent. That's turned. That's the only stock in China worth owning. Tesla's also gone from daily and weekly buys. So there are some things that are shifting underneath, Powell, but I'd need to see the NASDAQ and the S&P throw some daily buys here for me to get really encouraged. Maybe you can say, hey, look, we bought them and that flips back up. But I tell you, the other thing I need to see is I gotta come in and see more stocks near the pivot, guys. We got so few stocks near the pivot. Very few breakouts, and this has been going on for a while. So there's some damage that's been done to the right side of the chart that's got to be repaired before you're going to get these names to show up at the pivot in mass. DVA keeps showing up. I like that name, guys. Dialysis targets 171. Look, the pricing action in some of the medical stuff, like TMDX that we hit. That you get company specific. I mean, they're clearly killing it. That's a company specific trade. So that sector's been interesting. Trade well. So we've got some stocks that are making bases. Just need to see more of them. In the 250 world, it's been tough to catch a lot. MedPace is one that we had an Apex 20, great stock. It's in the consolidation. So you've got stuff in consolidation, just don't have a lot of breakouts and don't have enough near the pivot yet. So got to see that right side of the chart get a little better. That's what
look at Tenet Healthcare, THC.
Yeah, hey, a lot of these names, medical here again, Powell. Like I said, this is probably one of those pockets along with insurance. Look at Progressive. Bonnie, thank you, Bonnie, for talking insurance with us in the chat. But insurance, a lot of property and casualty names doing well. A lot of people talking about a lot of cost increases. Insurance companies usually get to pass on the costs, and everybody kind of just has to eat it. So they tend to be a price setter. Still seeing some decent trade action in the names and the AVAVs and that type of thing. But anyway, we'll get into a few more specific stocks. But systems, all in all, not all that bullish, guys. I mean, let's just be real honest. We've got some work to be done to get all the trends back in. VN's at 205, neutral. If we break down through new lows, we'll go negative. If we can consolidate and keep SMCI and NVIDIA up from here and base out, maybe we go to 3 of 5 and conditions, improve and we'll get a little bit longer. But right now, we're mostly cash. So let's go through quickly. Swing trading portfolio. We blew out of everything here except GDS. So 90% cash or so. Had some decent trades mixed in here with TMDX and Viking had started breaking out. AVAV made a decent trade. So trying to find stuff that was, working, but it was challenging and has been. In the intermediate sector portfolio, some of those names have bounced back pretty nicely. Only a few in trouble. I'd say like ARC Best. You get down that level, you might want to sell. Maybe Builders First and LPX. They're getting close, 15% type stop loss. But you've seen a little bit of a bounce back here. Look, that's gonna flow with the market. In terms of intermediate time frame type guys, I would tell you to probably ride most of these. In all cases, cut your losers and scale into your winners, just like you do in the Carnivore swing trader portfolio. So if you got names that are performing, those are where you add. If you got names that are underperforming, those are where you cut. And I think, quite frankly, my favorite here happens to be the one at the top. So VRT is by far the best performer and, quite frankly, has the best story and is probably as closely linked to the AI trade. So keep that one on your radar. All right, now we're going to talk a little bit about the long-term portfolio. If you're not logging on to your dashboard, you're probably not checking in on this very often, but you should be. Let's see if we can. These are our buy and hold names, guys. Let's see if we can refresh to get that. There we go. So Amazon, NVIDIA, Lilly, MVO are our big winners, along with PRCT. Only real big loser we've got here is GCT. That's really just because we top ticked it. And probably you could say a pretty similar thing about Bitcoin, but no big concern in terms of the overall portfolio. Coin and Hood also in a pullback, all those somewhat tied to crypto. But a lot of these names are still in the buy zone. So if you're looking to add, I would probably wait. Given our outlook on the market, you're probably good for another week or two. And then maybe if we head a little lower, you can enter there. We might make a note of it in the wrap. So look out for that. I would also tell you that we'll probably add a few names in the coming weeks. So don't be surprised if you actually see us put 4 or 5 names on this list in the coming weeks as we add in this pullback. That's what you do as a long-term investor. You buy with this. If you think the longer-term trend is still up, which obviously we do on this time frame. So we'll be coming to you with our best ideas for you longer-term guys. These are typically bigger. We've got some mega caps in here. We'll sprinkle in a few mid and small cap names too, but there's our intermediate term portfolio, not off to a bad start relative to the market.
Let me add there, Z.
Yep.
Guys, if you haven't been to the dashboard yet, go to your dashboard. It's all cleaned up and cool looking, and you can very easily find all these, the intermediate, the sector plays, all that kind of stuff.
There's your dashboard link up here in the top right-hand part of the corner. You get this cool shot of Dutchman at the mansion on the motorcycle.
Oh, he was a little heavier then.
Hey, that's the beauty of Nova Nordisk. That's why Lilly and Nova Nordisk stock is still going up right there.
Yeah, I was afraid he was going to fall off yesterday. We had to slow down. I was like, someone get this man a burger.
He's looking.
Someone get me a burger.
He's looking slim and good these days. So Here's your dashboard. You got your sector analysis and daily wrap, weekly calls, live alerts. So if you want to pull that up on your web page while you're at your desk during the trading day, you can get the alerts pop up immediately. So you got very limited delay there, like with the app. A lot of guys are liking that who are desktop traders. We got a buy and hold here. For you guys that can't keep up, that's the place you can go and look at the longer term picks. And of course, the weekly calls can give you our longer term sort of take on the weekly action and the monthly action like we're doing right now. So keep this new dashboard in mind. This is all part of our constant efforts to improve the experience that we give you guys and the information. And we hope you find it useful. All right, Jay, we're 45 into this thing, buddy. We better get into some questions.
Well, hey, man, it looks like it's going to be a short Q&A here today. We've got two.
All right. Let's do it.
One, Bradley, thanks for being with us, Bradley. LRMR. Do you have any thoughts on that one?
LRMR.
It's a new one to me.
So I'm like sitting here thinking, like, why do I know this? Okay. Biotech, medical generic drugs. Some of these classifications, guys, get a little quirky, okay, in terms of where they get stuck. Just know that if it's listed on the NASDAQ and you're trading at $7, and you've been hammered, you're trading with the biotechs. So there's LRMR, here's IBB, and there's IBB. You can see a similar sort of weekly correlation. We're trying to bounce in a flat base here. Look at this consolidation we've gone through for years in biotech. It's what it looks like on a monthly. We're basically where we were in 2014. So we've gone nowhere for 10 years, guys. Flat base is developing terrible relative strength. It has turned up and you're bouncing. LRMR is going to track that extensively. Now, if you are of the thought that we've bottomed and we're going to leg up here, then maybe there's a play. I don't have any information to give you on earnings. 7 days away. I have no insight, so I'm not going to lie and say that I do. If you're already in it, maybe you hold it on the idea that 6 is going to be support and you're going to start legging back up towards 10 because biotech is bottomed. But as it sits, we were really hyped about biotech here. Got out mostly up here, made a lot of money in that little stretch. Like the fact that we're trying to bottom, but where I'd really get excited would be here at the pivot, because Trader Z likes to buy strength. So I would say the same thing about LRMR. If you're in it, maybe you hold it. I wouldn't buy it here though, unless you were convinced that you know something fundamentally about this company and why it might go up.
Right on. Jason F says, do you have thoughts on the new fuel stocks, possible run CCJ and UUUU? Yeah, look, so we got a nice little cup and handle. These stocks have held up pretty well. I've heard people kind of bitching, but look, that's consolidation, guys. Nice cup and handle. Hit resistance is 50. 50 is where you got to really get through, and then 52 would be the next. I am bullish uranium. I am.
The Senate banned.
They just banned Russian imports, pal.
Yeah, they just banned Russian uranium imports.
That was yesterday.
Yeah, so that's probably going to help that whole sector.
So the reality is, though, guys, is we're in a consolidation. You see it? The chart's telling you. You've been in it for 61 days. The depth is 27%. The pivot is 834. Okay? There it is. It's clear as day. So if you're in it, hold it. Buy more at 834 when it breaks out. Probably a seller at 6. Hope that the relative strength improves at 95. EPS should probably be the next catalyst to get you there. That's 40 days away on UEC. So just know that you're probably buying into a consolidation. Right there you are up here. I mean, this is what you want. Leg up, new high, consolidation, leg up, new high. UEC is unhedged. CCJ's production is hedged. There's going to be more upside with UEC. The CEO also owns a bunch of stocks, so he's a believer more so than CCJ. CCJ is the big liquid name in the space, though, so that's your safe play. Market cap's $20 billion versus 2.7. Nuclear will be a fundamental part. Hey, nuclear will be a fundamental part of the data center build out. We do not have the energy to supply these new data centers, and nuclear will be a part of it. And there's a great story on Zero Hedge about the ability to turn old reactors back on.
Well, not only that, but they're also talking about nuclear subs and nuclear warships, making small nuclear plants for these
the micro reactor.
Yeah.
Hey, it's been around on Navy boats and submarines for decades. They've perfected the onshore versions. They work spectacularly. They can, power small cities in the middle of nowhere. People, it's the whole not in my backyard phenomenon. Look, nuclear is going to go through a renaissance. We're going to need cheap, affordable electricity at scale that is unimaginable. And data centers will be a huge part of that. EVs will be another. Long term, there's no way we can get there without nuclear. So, yeah, I'm bullish long term. Just know intermediate term, you're probably stuck in a consolidation with the rest of the market.
And did you know that Microsoft hired a guy to develop that division for them?
They did, to go with the data centers, right? So,
Yeah.
So, hey, Powell, who has the capital to do that? Those guys do, right? They can do it.
Exactly. They all do. All the mega cap techs have got the money to do it.
They could all build out their own power infrastructure, just like Amazon built out an entire transportation grid. I think that's one of these stories. Hey, don't be shocked to see something like UEC get added to the long-term portfolio, guys. Because I'm showing you on the sector, look, remember how the funnel works, how the whole carnivore process works, guys. Go back. What was I telling you? Mining, ores, right?
Yep.
So what we'd love to see is for, that sector to come alive and for, us to come in and start getting some buy signals on UEC, in the systems to confirm the fundamental bias, right? That's what you want. You got this fundamental belief about nuclear. It's confirmed by the trend. You get consolidation, and then you wait for the optimal entries to be fired by your technical indicators, buy near the pivot up here around 8. That's how you do it. All right, we got any more questions, Jay?
Yeah, we do. Dave says, what are your thoughts on Micron and Okta over the next year? Thank you. Learning a lot.
So Micron had gone on a great run. They had a great earnings call. You had this great gap up. A lot of people got really excited.
I was one of them.
Look, I got to tell you, I got mixed emotions on this stock. It's a commoditized product, so it lacks all the things I love about NVIDIA in terms of being really like technology that can't be replicated by other groups per se. But I do think it's a great barometer on the space. Okay. And look, you go back to 2000, you just broke out to new highs. Like, that's pretty big. I mean, look, that got me excited about what was happening in data storage and computer hardware. So
I just like Sanjay. I mean, I just do. I'm a fan of the CEO.
Look, he's a great CEO. He's done great here. He's done great in turning this company around. This stock was at $2 in 2008. Okay, it was at 10 in 2016, and they're at 109. He's doing a lot of things right. Okay.
For those that don't know, he founded SanDisk. That's his claim to fame. So
he did, and look at this bounce that these engineered here in earnings here. So you're seeing the trend in earnings turn back up. That's what's got this stock excited. Okay, so to answer your question, I really like this monthly breakout here. Okay, good relative strength. So I like it long term, but I'm not crazy about where we are here. I'm not crazy about this. I think you probably got to do some work before you take off and get to 130. And to be honest with you, if I hadn't put money into these and I had to buy this or I had to buy the same stock I talk about all the time, I'd buy NVIDIA.
Yeah.
All right, what was the other one?
Okta.
Okta. I like Datadog better. Yeah, look, you're back here at support in both of these consolidation patterns. But relative strength is kind of weak. So this would be one that you go and say, what's acting better? CrowdStrike's acting better. Cyber's acting better. And Datadog is acting better. They don't really put those in the same category, but there's a security component in data. Here's Datadog. Datadog's got a nice flat base you're working in. You don't have to pile into that because it's probably going to keep going, but I like this relative strength at 92. I'd be a buyer here at 140. That's a better looking chart to me for a company that's IPO'd, not that far off the highs. Earnings in 6 days. That might be what you triggers, your move up. But yeah, I got to tell you, that'd be one where I'm a CrowdStrike Fortinet guy. Fortinet's been building the base the longest. You can see on the monthly.
Right.
Terrible relative strength. Got to turn up.
Yeah, that's one you and me have been talking about for 2 years.
Founder owns 40% of that stock. Look, on a monthly
And that's
basis.
the problem.
On a monthly basis, this is a beautiful chart. Look how much value this guy's created. That stock goes higher eventually. You could be in. Hey, as Dutch would say, you might be in it for fucking 6 months and not go anywhere. So, great company though. Great management team. Good question. I like Crowd probably in that space over Okta.
All right, we got some more coming in here. Josh says coin is in the long-term portfolio. Earnings are tomorrow. Do you think buy before earnings?
Not in this environment.
Yeah.
Not in this environment. Not with how Bitcoin's trading. I don't necessarily think earnings will be bad. They're doing some really creative stuff. They got a subscription plan now that if you sign on to the monthly sub plan, they reduce your commissions.
That's
It's
right.
actually-
Yeah, I've been. Yeah, Coinbase Gold. It's $50 a month though.
$50 a month, man.
Yeah, I forgot
If you
that I
trade
signed
with any
up for it.
size, let me tell you, if you trade with any size, it's totally worth it.
No, absolutely. It's and it allows you to transfer in between altcoins as well at zero commission base.
Yep.
It's been really nice.
It's been look, if you're into crypto and your own Coinbase and you're
I've
buying
been a
in
member
these
for over a
guys,
year.
yeah, I would tell you go ahead and do it. Look, they're doing a lot of cool things. Their chain base is really it's been really well received.
Mhm.
I think outside of Solana, base has kind of become talked about as an Ethereum competitor. That's a Coinbase project itself. They're doing a lot of really creative things within the crypto space. I like this company. I love the CEO. Trying to get back to the IPO price. Good grief. That's been a nice round trip. But look, if you're a believer in Bitcoin long term, this is probably a hold. The only thing that would make this interesting as a trade is if you want to lean off that 187 mark here as support. Given that was a breakout point, that should hold if you're a bull. So, we'll see. Maybe look, you could have a market that has to chop around for a while, and these guys have to chop around 250 for a while. So I'm just not in a hurry to buy here. And hey, now that I said that, watch it pop like 15% on earnings.
No question. No question.
Hey, trailer
If things
says-
were better, maybe I'd be more inclined. But you look, if you're buying in front of earnings announcements in this environment, that's kind of like playing fire.
Z Trailer says, what do you think about DXYZ? Is it going to come back?
Jeez.
Yeah, there was a few questions on there. See, we probably had about 4 different ones. So
Look, you've got a full-blown, parabola that's busted here. Back to the listing price. Look, it's kind of like, I'm going to say, I'll compare it to this. I bet people were feeling pretty awful here from 79 to 20. These things are 100 to 15. I mean, look, guys, if the risk, appetites come back, this is going to come back with a fury.
That's one you ought to buy and just put away and forget about it.
Here, Powell, I said maybe treat it like Bitcoin, and here's the problem, guys. This is the kind of thing that if you build your position in size to begin with, it's really hard to add to.
Yeah.
Whereas if you'd have said, hey, look, I'm going to trade this like really small, then you could be scaling in here. Okay. If you're not, no, I'm not selling here. Look, go through the portfolio. I mean, if you believe, then you believe. SpaceX is a real company. There's some real companies in there. They're not all going to succeed. Tough to put a value on this thing. If I was in it, I'd probably hold.
Z, I'm gonna put you on the spot. Tomorrow we got Apple, we got Amgen, we got Datadog, and we got Cloudflare. Is there anything in there you think is worth playing?
Datadog, maybe.
yeah,
I don't see how Apple says anything exciting.
Do they have a big meeting in June?
They have their, is it
Like
it's called
technology?
the
Yeah.
developer conference kind of thing?
Yeah,
is what they call it, I think. This stock lacks a catalyst.
Yep.
The only catalyst I could give you would be technical, and it would be, hey, it's trying to hold this low that we set at 164 because it's Apple and no other reason.
Right.
I don't see fundamentally them saying anything that gets the market exciting. Cloudflare, I don't. Yeah, I don't think the associated companies around it have probably reported all that much that gets me excited either. And then with Datadog, that's the only one I think. This is the one that technically, to me, I'm surprised at how well this is held up.
Yeah.
That makes me think that maybe somebody believes that we got a decent number coming here.
and it's NVO in the morning tomorrow. Z as well.
NVO, yeah.
In the
Look,
morning.
NVO will they'll blow it out. Now, whether the market loves it or not, whatever. But yeah, NVO will blow it out. The numbers will be huge. Could be enough to get the same reaction that you had with Lilly. In fact, quite frankly, for anybody that was like, look, guys, if you wanted to get all if you're that guy that's trying to get crazy in earnings season and have some fun, well, NVO is your play.
Well,
Lilly's-
that's where your puts people come in now.
That's right. Hey, that's where you
I mean,
you
I'm just going to be honest.
You sell the puts on
the
NVO. But look, Lilly's going to 1,000, guys. Okay. Here's your double bottom pattern. You're right at the pivot. NVO's in the consolidation. Nice flat base. Okay. Looks good on the weekly. I mean, this is what I buy. This is what I'm buying.
Qualcomm had a good report.
Hey, they did. Look, hey, and then let me get to that one real quick. And then Viking, look, same kind of. These are all consolidation patterns and uptrends. Hey, if I wanted to go hard on something, I'd probably start.
In the
I'd start
Viking.
buying this. Yeah, I'd start building into that. But
Yeah.
okay, so Qualcomm did report numbers were good, and you got a little bit of a double bottom potentially playing out. In Qualcomm needs to hold here though. And I got to tell you, there's a lot of semis that have impressed me. My favorite outside of NVIDIA is Broadcom, similar double pattern Powell as Qualcomm. I think semis have held up really well given the run they made and relative to some other names in tech. So for what it's worth, the Qualcomm numbers kind of confirm that. Look, if you're trying to play earnings, NVIDIA is going to kill it and NVO is going to kill it. Now, how the market reacts, who knows? But those would be the ones that if I was so inclined to get bullish about some earnings, I'd go there.
Because we know that Meta at least gave them $5 billion.
Yeah.
Of course, it did shave $200 billion off their market cap, but
Yeah, look, I think the thing that was really impressive about the Meta call was not only what the CapEx for the quarter, but it was their basically telling you that it's not going to slow down.
That's right. I think it's giving you a buy opportunity. That's just me.
That's right. What else you got?
Yeah, Z. Christopher D says, short the banks. Got more that are going to fail.
So, JP Morgan and the biggies, no. They're too big to fail. They don't have any exposure to this regional stuff that's happening in these buildings. The regionals, I don't know. I don't know what's going on with the regionals. Look at Zion. They're not breaking down.
That New York Community Bank had a big day today.
Yes, they did. And in fact, they said, hey, look, we're going to make some money.
Yeah.
So, I got to tell you, I would have expected more bloodshed here. It's one of those things that keeps – look, we get these days where people get really spooked. Mm-hmm. And I'll tell you what keeps me from getting really spooked about where we're at is I come in and I see the most like the worst bank in the world. the biggest systemic risk to the banking sector in the entire globe. And man, it's like it's running. Okay. And hey, I got Argentinian banks running. So I guess the answer is no.
And look at that Fulton Financial. It's had a hell of a run.
Hey, what's the ticker on that?
FULT.
And look, same kind of setup like Zion.
Yeah.
Where you just kind of, I'm not telling you to buy these stocks, but that just aren't, they're not going down.
You got a crossover of the 20 and the 50.
That's right. And then look at like the whole space where you go to the Fifth Third. There's Fulton, there's Huntington Bank out in Cali, which would be where you would start to probably see it. And look, these stocks look like they're getting ready to head higher.
Yep.
So I don't see it in the banking sector. In fact, this
which
is
will be
why,
good for the Russell.
That's right. And hey, Powell, it's why I just don't think the Russell cracks the 200-day. I really don't. And look, maybe you make a stand here at the 195 mark that we've talked about here. Look, I mean, there's.
Yep. I think the regional banks doing what they're look at the charts are telling you that the Russell will hold.
Yeah, and I really think, as I told you, I don't think the Qs lose their 200-day at all either. I think the Qs probably have a flat base that's developing here. That's what the system's flagging. That's the most optimal that we hold there. So the system kind of outlines that. Look, you got to be open to a leg lower though if we get higher rates, guys. Just remember that. Remember that's what you take away from this call.
Watch the 10-year.
It's the 10-year. It's the macro. It's liquidity. Unfortunately, the earnings are taking a back seat. If you got to hide somewhere, you hide in the mega caps right now. If you're looking to buy something, it's probably NVO, Lilly, and NVIDIA. And the rest, you probably just need to wait till we get another 2-3 weeks, either of sideways trading action or we get a little further into this pullback before you start getting crazy in the buys. We'll come in on the long-term portfolio probably at that time, so cue in on those things. That'll kind of give you our feel for the longer-term, intermediate-term view. But for now, you see Dutch and cash. We're going to be keeping it pretty thin and pretty tight until we get better setups. We got any more, Jay?
Yeah, let's do a couple and then we're running a little late. Bill, we'll get back to you on that.
Yeah. Listen, we'll get
Godfather
back to
follow up with you on that, Billy.
Yep.
Doug, Doug says his money manager bought him PPRUY. It's a French stock at the start of COVID in 2020, and it's down 80%. And he wants to know if he should dump it now or let it ride.
I got a
All
good
right.
lawyer. I got a good lawyer he can talk to.
Are you talking about dumping the stock or dumping the money manager?
So give me the ticker again.
PPRUY.
PPRUY. It's carrying. Okay. There's your monthly. Let's go back in time. Let's go back a little further. Picture's not as bad when you go back, right?
It looks like a head and shoulder to me.
Okay. So we got a real company, right? So that's the first answer. This is your carrying ADR. So, okay. Clearly, we're in a major correction. The peak was 84. We're down to 34. I would say from a chart perspective, you're back down here, that 32 mark that held last time. You had some buyers come in. We're obviously not quite really oversold, but you've worked off this ridiculous overbought. A lot of shares changing hand down here. Look, I don't know. Let me do some more fun. Look, this is where, guys, okay. This is where you do the deep dive. Okay. This is where you go back and you read a conference call. This is where you look for an analyst who's got comments on this. This is who knows the company, who knows this whole story. This is where you get online and you look in the chat rooms and you look at the guys who've been following the stock. And I'll do this for you. We'll bring it back up on the next call so I can show you the scuttlebutt of what I'm talking about. And you put together the mosaic, okay? And you try to discern from a fundamental story, do I need to fucking ignore how terrible this chart is and hold this stock? Or do I need to dump this thing? Because this thing is fundamentally damaged and it's going lower. I can't answer that question until I do that dive. So we'll do the dive. We'll get back on. We'll talk about it. We'll give you kind of a worldview. But it gives you process. And so what I would say in looking at the chart, my gut tells me, I would hold here. You've got a lot of hands that are shares that are changing hands here. Okay? So a lot of people are out. A lot of people have already thrown in the towel. You got a lot of losers out. Maybe if there's a fundamental story about what the turnaround is, what the plan is, what they're doing to get this company on track and get the stock going back up, that's what you have to figure out. The things I don't have, and remember, we're not financial advisors. So we're not giving you financial advice. I don't know your net worth. I don't know how much you own. I don't know what percentage of your portfolio it is. I have zero of that. So I cannot give you any context of whether you should buy or sell it in regards to that. All I can tell you is whether or not the stock, technically, yes, it's busted, but it's extremely busted. So when it's this busted and you're still in it, you got to go to the fundamentals to figure out if there's a real story to get this thing turned back around. And if there's not, then most likely you dump it and you move it on to something else.
Beautiful. Steve wants to know, should he sell his GNRC? What do you think about GNRC?
Generac, great company.
It's a great company. It's
great product. Just a great product. If you don't know the Generac product of generators and power equipment, it's great stuff. If you live in an area where power goes out, it's just invaluable. So this was a darling stock, 524. We pulled all the way back to 79. Look, it's just like the rest of the alternative energy space. It's like a lot of stocks like this. It's just building a base down here. I think if you're in it as a fundamental long-term play, that's okay. There's probably better opportunities elsewhere if you're a trader.
I'll tell you, G, my dual theory on that is, someone who's tried to get it on a different house, it's when you call them, it's a month or two to get out to look at it, and then it's 2-3 months to get it installed. So if I was going to be a trade, that's if they could figure that out, and you can't buy that on a whim because you're going to talk yourself out of it within 4 to 6 months. I think that keeps their sales a little bit lower. You got to truly be pot committed to that thing to buy it.
Not only that, Godfather.
It takes a while to get one.
I'll take it a step further. That's a rich man's product. Okay. Anybody that's investing in a backup generator that costs what these things cost that for most, for poor and middle class families, that's an inconvenience that's just too pricey to pay to eliminate. So what I do say is I do think the stock is bottomed. Okay. So if you're in it and you're like, hey, I don't think it's going to go lower, but I think this might be dead money for a while. Even though I like the company and the product, I think it's probably dead money.
Cool.
Okay. Russ has a lot of questions. Russ, aren't you coming to the academy? I mean, save the questions, man.
Hey,
Maybe
you're
it's
looking for a French stock to buy.
A what?
Are we?
I said, someone's looking for a French stock to buy.
I was going to say, did they have any of those?
Here's your buy. Yeah, no. This will get added to the long-term portfolio.
Oh, absolutely. I was just giving a hard time.
This will get added to the long-term portfolio. This is your entry into the greatest luxury brand company in the world. So all you financial advisors out there looking for high-quality blue chips to buy your clients, tell them good stories. All that's going to take to get this thing to run to 1,000 is
That's right.
a lot of people in Asia buying some Louis Vuitton.
This is how you tell your girl you bought her some Louis. Hey,
That's
babe,
right.
I bought
Hey,
you
yeah.
some Louis.
Instead of buying the Birkin bag from Hermes, you buy some stock, and you'll end up better. That's a name. You might see another luxury brand get thrown in there. Look. You can't stop Ferrari. They allocate their product. How many companies allocate their product?
Yeah, and then Rolls-Royce just opened
Great
up.
problem to have. Hey, you still in that, Godfather? That's been great.
Absolutely, brother. It is. Thank God it's hard to sell. I mean, they keep asking every time I've wanted to sell it. A trade station asks me like, "Hey, you're probably not getting a good price." I'm like, "Screw it." I love that stuff.
They make great engines. Look, hey, we threw this out a couple of years ago. Not many participants.
It was on
Godfather was one of the few. He was a brand loyalist. This was a great turnaround. They make great engines. Hey, here's the only English stock worth buying. Probably you got one. You got one in France. You got one in England. You got Nova Nordisk, and that covers all your European exposure.
We are European based. That's it. Oh, and then of course Viking came out today, right? New cruise stock. VIK for Viking.
Hey, you know what?
And that
cruise industry. Here's. I've been amazed, but cruise industry continues to fire pretty well.
Yeah.
All right. Hey, that's the show. We thank you for being here.
Yep. Sorry, the guys we didn't get to. We'll get you next time.
Look, if you got a question we didn't get to,
fire
us an email.
Bill is an interesting stock, especially because they have dividend things a little wonky. Can you do that one as your last one? I know a lot of people.
Bill.
Yeah, that's
Bill.com. Look, this thing has been in the doldrums for a while. Yeah. I like this space. I don't really dislike the company. However, I don't know why they're necessarily categorizing with Coinbase and CLSK, but I do know it's a 10 relative strength. And that's just, look, I like to buy relative strength, and this doesn't have it. So if you're in it, probably unlikely it's going to go lower than 50. We got an EPS tomorrow, so maybe there's a catalyst to get something going. But terrible composite score. So just not the catalyst. I don't see the catalyst here to get this one going.
All right. Hey, thanks everybody. We're going to do this call again in the evening next Wednesday instead of Monday, because it's going to be shot live from the Academy. So thanks for showing up. We'll talk to you then.
Thanks, guys. We love that you're here, and we appreciate all of you.
Thank you, guys. Thank you, everybody. We'll see you all that are coming out next week.